All right. Well, Alex, I've got 2:30 Eastern time on the dot, and I see a bunch of folks here in the audience. So I'm going to say we go ahead and get started with our 20-minute chat, if that works for you.
Let's do it. Let's start.
Cool. Well, thanks everybody for tuning in to join us. My name's Steve Boms. I'm the Executive Director of the Financial Data and Technology Association of North America. We're a coalition of fintech firms, aggregators, and other technology companies united behind open banking and the power of fintech to deliver better financial access, better financial inclusion across not just Canada, but the US and the world. Alex, maybe if you wouldn't mind introducing yourself.
Sure. I'm Alex Ronces. I'm the Executive Director of PayTechs of Canada. We're an industry association that represents fintechs and payments specifically. We've been advocating for public policy change to promote more competition and innovation in the sector.
Fantastic. So Alex, I mean, we could talk about this stuff for hours. We've got 20 minutes. So we'll try to do as deep a dive as we can. But I think really one of the things that spurred this session was the inclusion of retail payments language in the budget last month. So I guess the first place to start is, from your perspective and your members' perspective, what does that mean? And is that the end of a long and arduous journey of payments modernization?
So yes, that was the big news, I guess, for the payment technology sector. There's going to be new payments regulation at the federal level in Canada that payment technology companies will be subject to. The Bank of Canada is the regulator. The legislation is supposed to be two things. One, it's supposed to strengthen the payments value chain in Canada by making sure that end user funds are safeguarded, by making sure that payment service providers abide by a minimum standard with respect to how they operate, incident management frameworks, all sorts of things to mitigate operational risk. So it's a big kind of safety and soundness play. The other thing it's supposed to be, though, is enabling legislation. It's supposed to enable broader access to payment systems, and I hope the inclusion of third-party payment initiation under an open banking framework. On the one hand, it has been the outcome of a long and arduous journey. There's a reference to function-based payments regulation in a report from the Canadian government in 2011. Several discussions, several consultations later, we have the act. But it's not the end of the journey. It really is only the beginning. When I look at some of the basic building blocks of a modern financial technology sector, and I'm sure there are more that you can think of, but three that come to mind at the very least are modern regulation, access to payment systems, and open banking. We have that first building block in Canada, or we're about to get it, but we still don't have building blocks 2 and 3. And I worry that if we don't move fast on building blocks 2 and 3, we're just going to have more regulation without more opportunity to compete and innovate, which I think would be bad for the sector. I mean, I anecdotally talk to fintechs and paytechs who feel like they don't quite have a home necessarily in the Canadian market. They're thinking, what do I become? And there are some who will occasionally think, should I become a bank or should I leave the Canadian market? And that's not a question that we should really be putting to any ambitious startup or challenger in the space.
It's an interesting point, Alex. I mean, it's so important to think of these things as interdependent with one another, and to really unlock the value of technology and financial services. You're right. It's not just those three pillars, but I'll add a fourth one. Which is, as I think many people know, the 2018 budget, way back in the before times, had language in it that requires the Department of Finance to promulgate regulations on financial technology investments by large financial institutions. And that had been positioned as a way of increasing the available capital for investment in Canada's technology economy, which is a great thing. Obviously, I work with the companies that would benefit directly from those investments. But when you think about unlocking that potential in the absence of, for example, an open banking mandate, you come to a conclusion that unfortunately I think just furthers the status quo, which is massive consolidation uh, that is controlled by the largest entities in the space, right? Because ultimately, all of this is just regulation unless you're really putting the consumer or the small business at the center of that ecosystem and thoughtfully thinking about the interplay among all of these different levers that you're moving forward and how they either work well together or don't work well together. And so, to your point, you think about a modernized retail payments system. It is not difficult at all to foresee the pain points that you might experience as a stakeholder in that market if you don't, for example, have the open banking landscape where your customer has full utility over their data. But there's tons of other, similar interdependencies that I think we could both talk about.
For
Yeah, please.
for sure, and that risk you mentioned, I think, is especially problematic, especially scary in the Canadian market, where the conventional wisdom is we have a relatively lax or passive, or maybe if I can use the word conservative, competition authority, that is conventionally seen as a sort of follower. They're not a first mover. They look at what other competition authorities have done in other jurisdictions, and then they decide what to do here. The Competition Act in Canada also prevents our Competition Bureau from compelling information from market participants so they can understand the market that they're supposed to be overseeing. There are certain provisions in the Act that prevent them from intervening when the move might improve efficiency, but maybe wouldn't necessarily be good for competition. So this point you're raising about thinking about all the different interdependencies and making sure that the government as a whole is thinking about this sector in a coherent and more deliberate way, I think hasn't been made enough. Because you're right. It's not just easy as moving this regulatory lever or that one. You kind of have to have a strategy for moving them all and in a very particular sequence to make sure that you're getting the best outcome for consumers and businesses.
Yeah, and it's I'll share my own frustration in that one of the benefits of being, I was going to say a fast follower, but a follower at this point, I think fast is no longer appropriate, is you can learn from the good and the bad of other markets, right? And you don't necessarily make the same mistakes as other markets have. I'm not sure that Canada has learned the lessons just yet, even though they're readily apparent from Australia, from Europe, from the UK, from Singapore, from any number of other markets that have meaningfully moved farther along on these various paths than has Canada. I think, for example, of PSD2, which along with GDPR really started the open banking revolution and the Fintech revolution, data portability revolution. The impetus for PSD2 was competition. It was the entire reason why PSD2 was derived. There was insufficient competition across Europe in payment accounts. Years later, Europe, the UK, look back on PSD2, and the overarching feedback is we really wish we hadn't limited only to payment accounts and that we would have thought more holistically around how consumers and SMEs interact with their financial services providers. Because the average consumer picks up their smartphone today to conduct some type of financial transaction. And they don't think to themselves, am I accessing a payment account right now or some other type of account? And what are the rights and protections that I have? And how are they different from one account to the other? So I think we're harping on something here that it's not a secret, right? And it's a bit frustrating to me because, I know that some of the leaders in those efforts, Scott Farrell in Australia, for example, Imran Singh in the UK, and others have spoken at length to regulators and policymakers in Canada. They're hearing the message. And while I think incremental progress, like what we saw in the budget on retail payments, is great, there's just such a clear library of lessons that stakeholders can take and begin to move forward. So I guess the question back to you then, Alex, is are you optimistic about where things are headed over the last several months?
So that's a tough question. It depends on the day on which you ask me. I'm generally a pessimistic person. Um, I'm glad to see. So look, I think the fact that the Retail Payment Activities Act was mentioned in the budget, that there does appear to be sort of growing momentum and interest in the open banking file. Given that these things are happening, I think we are going to move. So I'm optimistic in that sense. This stuff I think will happen. It isn't, as the advisory committee has said in past reports, it's not a matter of if, it's a matter of when. Where I get more pessimistic is on the when. Is it going to be in a few years? Is it going to be in a decade? Entrepreneurs, investors don't have a lifetime to wait to decide how they're going to spend their money. Don't have a lifetime to wait to figure out how they're going to spend their time. These decisions have to be made now. And this is the worry for me, because if your decision is, should I try to have a go at it in the Canadian market, which has high barriers to entry, which has all sorts of frictions in it, or should I go elsewhere? Should I go to the US? Should I go to the UK? Should I go to Australia? Should I go to Asia? I worry they're going to go to those other places, and they're not going to try to make a go of it in the Canadian market, which I think would be bad for Canada as a whole, not just the individual fintechs, but for Canadians and businesses.
And I think I'm also pessimistic by nature, by the way. I am optimistic on this front, because I think that opportunity cost realization is very much starting to permeate. It's not a theoretical question, right? I mean, we've seen a number of fintechs depart the Canadian market over the last couple of years, some as recently as within the last few weeks, citing some of the very same things that you and I are talking about as the key drivers of those decisions. When you look at where venture capital has flowed in the fintech market over the last several years, and you realize that the UK is one of the main recipients globally, it's not because it's a low cost of living geography. It's not because of political stability, given Brexit. It's because there is a clear regulatory framework in place and a map, a pathway for what the next few years will portend in this space. And with that certainty, you can then begin to write out a business plan for how you will approach that market and deploy your financial services. And I think that's becoming more and more clear. Look, the pandemic was obviously, from a human perspective, it has been incredibly challenging. If there's one moderate silver lining to it, though, it's that policymakers in Canada have clearly seen where the gaps are in the existing financial system. You look at other countries that have really harnessed the power of fintech to reach certain types of consumers and SMEs that the traditional financial services infrastructure has not. And Canada still has those gaps. And I think that's now become apparent. And so as the government thinks about how to begin to really build back better with a more inclusive financial services system, I am pretty optimistic that elements of this, a more holistic view of how to build a better, more technology-driven financial services ecosystem, becomes more of a priority, and certainly more of a priority than it's been in the last 5 years or so since we've been having these conversations. So, with my fingers crossed, and it's a very unnatural feeling for me to be optimistic, but with my fingers crossed, I do think we're turning a corner here, and I think we will begin to see some progress.
So I have a question for you. One thing I occasionally hear is that Canada is not like, for example, the UK, in the sense that back in the financial crisis, Canada fared better than some other jurisdictions, and so Canadians were left with a lot of trust in their financial institutions, and they didn't see that anything was wrong. They didn't believe that anything was wrong, and that really dampened the opportunity to put pressure on the government and find a political champion to advocate for the sector and champion these causes. Given that you think the tides are starting to turn a bit, what do you think is going to be Canada's moment? It's not going to be the financial, it's not, it wasn't a financial crisis, what do you think it will be?
Yeah. So first, Alex, I would say I hear that line of argument quite a bit, right? That, moving to a more inclusive technology-driven financial services ecosystem runs the risk of bringing in the next financial crisis. To which my response is always, I can guarantee you that you're never going to get hit by a bus if you just never leave your house, right? But then you're going to miss out on all of the experiences outside of your home, which is, obviously outweighs the cost of staying home. So I think when we look back on it, we'll say that there were a handful of inflection points in Canada. And this is, 5 or 10 years from now, looking back. I think we will look at the pandemic as one, right? The realization of where the gaps were when that infrastructure was needed most for many of the folks in Canada and SMEs in Canada who needed help the most and were not able to get it the same way that their larger peers were, in an unfair and unbalanced way. I think the second thing is we will look back at developments in other markets, and we will say that the global competition driver was one of the things that moved the Canadian government, particularly what we see happening in the US and what we see happening in Australia, where there's a strong march ahead. But third, I think we'll look back on some of those announcements by some of the relatively larger fintech firms over the last couple of years that have said, we just can't sustain a business here, as a pretty significant turning point. Because the counter argument that our sector has always made to government is that there's a real opportunity cost of not moving forward. And to some degree, I think government has internalized that as a theoretical, not a pragmatic or a real opportunity cost. Well, it's very real, and we're seeing it now. And so I think the combination of those three things happening at the same time, or around the same time, I think becomes the key inflection point moving forward. And that, of course, assumes that we do move forward, which I'm hopeful that we will. But I think it's those three things combined with the constant engagement that many of the companies that you and I work with have had with government over the last several years. I
think persistence is obviously key. One more question before we wrap up, because I think it's just a 20-minute fireside chat. Depending on how you frame the question, depending on the context within which you're reading about it, privacy can cut both ways. On the one hand, there are people who are seeking more privacy. They're downloading apps that allow them to track them less. They're shunning devices or apps that track them more. Open banking, a big part of it is about sharing your data. Do you think this sort of this push for privacy at risk of undermining the push for open banking at all? Why or why not?
I think it shouldn't. I think there's a risk that it does, but it shouldn't. Open banking is a terrible misnomer for what this system really is, right? Open banking, or customer-driven finance, as the department has now started to refer to it, at its core is basically saying to the end user, you are in control of where your data goes. Now, you can use that control to share it with third parties, but the counter argument is also true. You can use that control to make sure that it is not shared with third parties or with anybody else. So if it's thought of as both a privacy regime and a portability regime, which is the appropriate way of thinking about it, if it's also thought of as a way to regulate heretofore less regulated or unregulated actors, you put all of those things together and you say it's the logical next step in building the 21st century financial regulatory regime that puts privacy and consumer centricity at the core of how it delivers financial services to SMEs, to consumers, to all Canadians. I do think detractors of this, who mainly come at this from a commercial perspective, not necessarily from a consumer rights perspective, do harp though on the privacy issues, right? Because you think of the words open banking and you immediately think of the genie coming out of the bottle, and you can't put that genie back in no matter what you do, which unfortunately I think is an argument that has legs, even though it shouldn't.
So Apple released an ad about privacy and data tracking recently that made a bit of a splash in some circles, I guess, I frequent on the internet. And I heard rumblings of, big tech saying, "Oh, this is anti-competitive because Apple is making it harder for my app to track their customers' data, which is making it harder for me to compete with them." Um, which raises the question: privacy is a consumer good, but can it also be used for anti-competitive means? Do you have any thoughts on that?
It sure can. Of course it can. But the answer to that isn't restrict the ability to access the data only to the largest 5 or 6 companies that are in this space today. The answer has to be give the end user full control over that data and let them make the decision. And by the way, even though this is an unpopular opinion in some circles, my own personal view is if there is a level playing field from a regulatory perspective on data, on financial regulation, and on all of the other elements of delivering financial services, and Apple or Amazon or Facebook come in and offer a tool or a product to consumers, and consumers adopt it and agree to the terms and conditions and agree to that data sharing, then that's competition, right? And shame on the rest of the industry for not finding a way to compete on that level playing field. But what we don't have is that level playing field today, right? And if you are an incumbent who has access to that data today and has the right to restrict access to that data to any third party, you have huge, huge market control in a way that does not provide for the best types of consumer outcomes.
One difference I often hear about in the conversations I have with folks in the Canadian market about how easy or not easy it is to partner with a bank. And I think this ties into open banking when you think about the whole banking as a service platform. I've heard it's easier to partner with a bank in the US than it is in Canada. There are fewer banks in Canada that are willing to do so on good terms. Anyway, there are much more in the US. Given your sort of, not only global perspective, but your North America-wide perspective, is that distinction that people make between the two markets true? Is it myth? Do you have any additional thoughts on them?
So I think it's probably true, Alex, but I think it's also all relative, right? Like partnering with a bank on either side of the border is a tremendous headache, like just, relative to other markets. It is more difficult in Canada because of the concentration, because of the assertion by the incumbents of wanting to have control over how products are delivered and where data resides. But it is not at all easy in the US either. There is movement afoot by the US regulators to make it easier, particularly for technology companies, to partner particularly with smaller banks. Now, the US, of course, is a much different market. There are more than 10,000 financial institutions. So the top 20 or 25 have something like 60% of customer relationships, and then you've got 9,000 plus that have the rest. But the US's FDIC, for example, is thinking about if we publish a list of approved third-party providers, and we told our regulated banks, if you onboard one of those third-party providers, we will have centralized the oversight and governance of that third-party provider. You have a safe harbor to then work with them for specific products or services. Is that a way to increase innovation in financial services in a safe and sound way? And it's that kind of more innovative kind of front foot thinking that I think we're going to have to see regulators on this continent start taking. And look, to be clear, it's not that the US has actually acted upon that yet, right? This is just a thought that now a regulator is kind of testing out in a small way. But to be very fair, that's not even a thought that we've heard any Canadian regulator offer, nor could I envision OSFI, for example, offering that as an option in the current environment.
So look, I could ask you questions probably all day. I think we still have quite a few people on the event. Is there a way to get questions from the viewers? I wonder.
So I see a chat on the right-hand side. There was one thing I was going to respond to, Alex, which was a comment that Maria made earlier on about people in the financial industry not even realizing what open banking means. And This is another one that I hear all the time. It typically manifests itself as we can't do open banking because consumers don't understand it, right? And detractors of open banking often point to the UK, which has had open banking live for almost 3 years now. And 90% of consumers have still never heard of it. And the 10% who have can't describe it to you in a fair assessment. And here's my very somewhat whimsical comparison. Open banking is electricity, right? All you need to know as a consumer is that the item that you're going to plug into your open banking socket has been approved to work with the flow of electricity behind your wall. That there's been some oversight of the standards, that when you plug it in, it's not going to explode. You need to know that you can mix and choose whatever appliance you want, and when you plug it in, it's going to work. And you also need to know that with 99.999% assurance, the fact that you have the electricity running behind your walls is not going to cause any problems for you that you couldn't foresee. You don't have to understand how that electricity is generated, or where the wires are in your house, or how the appliance that you plug in has a converter in it that takes that electricity and makes it work. That's not the goal of a system. Open banking isn't the product, right? It's the platform upon which the product is delivered. So I always push back against this notion that just because people don't understand it is a reason that we shouldn't do it. There are tons of things in the financial services ecosystem that people don't understand, but that are critically important to do anyway. And as Richard just said in the chat, the core element of this is trust. It has to be trust. You have to know what to do if something goes wrong, but you have to trust that the overwhelming majority of the time it'll work exactly as you believe it will.
So I'm gonna come across like a Luddite right now. Where's the chat? I have chat, but I don't see Richard's. Okay, so, there's a bit of a delay on my part. It just showed up.
Perfect.
Just showed up. One question about standardization then, right? There are perhaps a few standards or a few different bodies vying for a role in open banking in Canada right now. Probably none of them are perfect, but we don't live in a perfect world. When it comes to picking the standard, well, one, should we pick a standard that exists in the market right now? Should we let the market compete on standards for a while and pick one later? And if it's the latter, how do you reconcile that with this view that open banking really is an exercise in standardization?
Well, I would say, I think it's great that there are multiple standards that are now being developed and deployed. However, I think it's very challenging to build a standard before you know what the policies are that will dictate how these tools can be delivered in a regulated environment. And I say that because you will just naturally make decisions about policies when you build that standard if those decisions haven't already been made. And I don't want to get too technical, but that involves things like, how long will the token last? When does mandatory expiration take place? What use cases will you allow to utilize the standard? Will it have read and write access or just read access? And these are all things that in our collective view at F-Data, that's not for the standard to decide. That's for the policy to decide. And then the standard is in service to the policy. And so I'll mix my metaphors for a moment, right? And now let's think of open banking as a highway instead of as electricity. The mere fact that you've put asphalt, on land does not guarantee the safe transmission of people from one place to the other. You have to have a speed limit. You have to have seatbelt rules. You have to say, here's the gross tonnage that you're allowed to have on this highway. Above it, you can't. Below it, you're fine. And if you were to just build the highway before you knew what those rules are, you wouldn't know how thick to make the asphalt. You wouldn't know how many lanes to build. You wouldn't know where the exits had to go. And so I think the honest assessment is there is almost assuredly the ability to take an existing standard and make it work in Canada, but only once those policy decisions have been made. Because until then, we are all just flailing at trying to figure out where the world is going to go. And we will implicitly have to come back and make changes after those decisions are made, which just adds cost and inefficiency.
That to me is the big worry, because when something becomes legacy, it becomes very difficult to undo. How worried are you by the fact that right now there's a lot of work being done to develop standards in various parts of the market, but they're being done in this legislative and policy vacuum, which means that perhaps implicitly, maybe explicitly, they're making policy decisions. Is that something you're concerned with?
It is, but I do think government has been much more aware over the last several months, particularly since the second phase of the advisory committee consultation kicked off, of the natural kind of bleed over. And to be clear, like this is not at all to be casting aspersions against the various standards bodies. I think you just have to, make assumptions about policy when you're building anything. So I worry that if we continue to see inaction, that will be the forum through which we will see policy decisions made. And they're not really decisions, right? It's just kind of, they're not thoughtful or deliberative. They're not necessarily considered all of the various stakeholders. They're just actions that have been taken in building something that then become decisions. So I think it's a mixed bag. On the one hand, I think it's spurred more conversations among policymakers. On the other hand, I think it also runs the very real risk of creating a legacy environment, Alex, to your point, in a different context, that we will have a lot of trouble trying to revert back later on if we don't address it at this critical moment. So I don't think it's a bad thing or a good thing just yet, but I reserve the right to come back a year or two from now and say it was a good thing or a bad thing.
Fair enough. Any questions from the audience? We're 10 minutes, 11 minutes over. I'm just being conscious of everyone's time.
I see in the chat my highway metaphor is gaining steam. So feel free to use that at parties, everybody, and we can go out and see each other again. Well, Alex, maybe we should leave it there. I think there's probably other parts of the conference that folks should be attending to. But I think I speak for both of us when I say we are obviously both passionate about these issues. You can find us both on LinkedIn. You can reach out to us on any social media platform, by email. Please don't be strangers. We are passionate advocates for this sector and would love to get to know you if we don't already know you, and work with you to further all of these objectives and goals. So I'll say thanks for me, and Alex, I'll turn it over to you for any last words.
Yeah, I echo everything Steve said. We're both super accessible. Thank you so much for listening to us chat today. I hope it was fun for you. It was definitely fun for us. And I look forward to talking to you all at some point in the future.
Always good seeing you, Alex. Thanks.